Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, daily created, highly anticipated edition of the Afternoon Swing Trading Floor with your humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What is going on, folks from around the world? How's everyone doing? It's Mentorship Monday in the building. We're going to get some back trading done today. We're going to do some more back trading. We did a lot of back trading today. We're going to do a little bit more, so it's nice. So, yeah, pretty pumped about it. We will review our swing trades. We will review the market broadly, and then just kind of dive into some swing trade practice, and we'll figure out what you guys want to practice. I'll just kind of pick, pick whatever ends up working for you and for everyone who's here. So, really fast review of the market. The pattern that we found on Friday and Tuesday does seem to be working. So you had big bullish candle, big bullish candle, big bullish candle, big bullish candle, and then you had the bearish retest gap down, big bearish candle, bearish retest gap down, big bearish candle. All right, so here's the similarities. And then the next day after the two big bullish candles, you had a little bit of a bearish candle with an upper and shadow, a little bit of a bearish candle with an upper shadow. And that's pretty much it. I mean, I would expect tomorrow to be a little bit more bearish. I'm hoping I'm going to get my R's back that I lost today. And I do expect this retest gap to fill exactly like that retest gap filled. So that's a lot of candles, but it looks pretty, I think. All those candles, all those arrows, all those colors, there are some definite similarities there. So that's pretty much what I got. And I'm going to watch a real close happening of that pattern potentially repeating. So that's realistically it. Here's what I'll be watching tomorrow. If I just pop over to the E-minis really quick. And the E-minis had a really good move actually today, I feel like. Last night, I was watching them when we got back from Frankfort, Kentucky. Really good gap down, good trade up, good trade down, trade back up, trade back down, and then kind of consolidated for a while. And I mentioned in the futures channel that here by here would be a good trade, and obviously a little bit of a target would have been that resistance, which is a little bit better than a 1-to-1. And then we came back down to that price, did it again, and then came right back down this morning. A really wonderful trap. I mean, what dreams are made out of kind of trap on the SPY E-minis. Just pulled right into where all of these stops were placed, popped in a little bit of a lower shadow, and then just rampage Jackson higher. So more or less filling the gap down. So we filled the gap down, and then we're hanging out again. So I'm actually going to watch this pretty closely to see if it does break lower, because I think it can. Now that the gap down has been filled and we trade down a little bit, I will watch for something that looks like this. Again, not saying it's going to happen, but I'm going to watch for something pretty much like this. Breakdown, retest, and then a roll down lower. We will see if that happens or not. No idea, but that's pretty much what I got. And that's where the 100 simple on a daily chart on the E-minis is. So we'll just kind of find out. Other than that, that sets us up pretty nicely. So what I'm going to do is just roll through our official swing trades. Because, again, we kind of got them all across the board. We got some bulls. We got some bears. We have a little bit of everything. And that's really it. I mean, as far as swing trades are concerned, if it's like August, you guys might remember that August was really tough for swing trades, but incredible for day trades. And if that is the case, if I get stopped out of some bulls and some bears, I'll just keep looking for things that are doing what I think is something different from the broader market. And again, just do a lot of back trading. I'll talk about some day trades that I made today. And again, then we'll go and do some back trading this afternoon. But today I did have a down day and I traded a little bit like a moldy banana. One of those 3-week-old bananas that you leave on the counter for too long. And you're like, you know what? I'm gonna eat this one day. And then you just kind of forget about it. And you just kind of leave it there. And then 3 weeks later, you're like, oh man, I forgot about that banana because I got hidden under some bread. That's how I traded today. We'll talk about it, but sometimes you win, sometimes you lose. We've had it before. I just like sharing the real life perspective of trading. You're going to have good days, you're going to have bad days. But if you do have a bad day, if you lose money, you might as well earn something from it. If the market takes some of your money, go get it back in another way. Go learn something, go do something physically, mentally, emotionally, spiritually, whatever it is. Put yourself through some additional pain because you've already did the most of the work. You might as well get something from it at this point. So after I lost and I was like, man, I'm just down on the day. I'm realized red. Let me go for a nice run. Went for a nice run, and it was one of the best runs I've had, I think, in my entire life. It's a really good run, and got a lot accomplished. I went 7.5 miles, which doesn't sound like that far, but I did it in a little less than 90 minutes. So I feel really good about that. That's a lot of continuous jogging, and pretty happy about it. So anyway, if you lose, folks, get something out of it. Don't just let it take you and make you mad, make you upset, make you worried and fearful and frustrated. Get something back from the market if you lose. So what we're going to do is we're going to look at our swing trades, the official ones. Then we're going to go look at the day trades that I placed, and then we're going to go do some back trading. So first on the list is PDD. So what I'm going to do is lower the stop loss on this. It was at 85 cents. Now I'm going to make it 95 cents. All right, so 95, we're definitely going to lose less than an R on PDD. And that's going to pretty much coincide with the upward this candle right here. So 95 cents is going to look like that. And then I'm going to change this target limit sell to $3 and pretty much say if we don't hit that or get stopped out by the end of the week, if we do not hit target or stop by end of week and we can exit profitable, let's do it. So that's pretty much going to be the update on PDD. This is a nice bearish one black crow candle. I'm going to put a limit sell update on PDD swing trade. Dave says, you inspire us. Thank you, sir. I appreciate that, Dave. And congrats for Dave. He got himself a frequent trader point for outplaying me on one of our day trades that we placed. All right. So update, target, and stop. So $3 would be a very small win. I realize that, but it would be a win, I guess, nonetheless. Right around half an hour. Okay, the next swing trade that we are in from the weekly options newsletter is Blue Apron. And again, it doesn't look ostentatiously, ridiculously bad. So my plan on this point, again, is just to hopefully win small on Blue Apron. We had a bullish trade. This is a bearish trade. We're down about half an hour on it right now. So my plan is to put a limit sell for $1.50. $1.50. And that would be a half an hour gain on those calls, which would be about $10.15 on the stock if we get up there. And what I'll do is I'll put the stop. I don't think we'll hit this, but I'll go ahead and put the stop at 30 cents so that the most we can lose is 0.7 Rs. All right. Absolute zero. Let me just make this font smaller. Okay, we already know we're in it. So just a little bit of a small update on Blue Apron. Okay, that was from the weekly options newsletter. Update on Apron. And I'll put that in the weekly options newsletter tomorrow as well. APRN update, throw that in there. Okay, cool. Next on the list, Workday. Talk about the smallest of margins, but most likely we will get stopped out of this tomorrow. I'm already embracing that fact, just ready for it. This was a beautiful trade that actually did work twice. It worked really well on this day and worked okay on Thursday. I could have exited Thursday, but again, as I was driving up to Frankfurt, which is funny because, again, the market usually does tank when I'm not available to take a trade on it. And that's when the market really did have a decent sell-off really, really fast with those numbers on Thursday. So I could have exited Workday, AVGO, and Dish Network for about, in total, I would have gotten around 2 hours on those trades. By the time I got to Frankfurt, got my computer set up, insert another million excuses. I did not do that. So most likely we're going to get stopped out of this one tomorrow at 179.43 for 1 hour loss, unless Harry Potter really comes down and wizards this thing down for us. That'll be a little bit of a loss on Workday. So go ahead and preparing for that mentally. Next on the list is Dish Network. Dish doesn't look awful. So we have a little bit of an upper shadow. We didn't break above 33.58 today. And yeah, so until we break below it, we still got 2 weeks left on those options expirations. And that's right. So that's pretty much what we got, and gonna watch it relatively closely just to see what happens and kind of take it from there. All right, so that's Dish Network, still in that one, still holding strong, still winning on those puts. And then Pays came all the way back down, which was kind of lame to see. We were up a solid R on that one. And yeah, it just all the way came back. So that's pretty much all I can say on Pays. Again, I mentioned on this one, if I get stopped out, I will try it again on PAYS. So PAYS, this is Pay Sign Incorporated. Here's the long-term moving averages, and the 200 simple is right where our stop is. So if this does come down, stop me out, and then works on bouncing again, I will attempt this one again. Could have exited on Friday, thought about it. I mean, I simply didn't. That's really all I can say on Pays. So PAYS, no big deal. Oh, you guys said the screen's frozen. That's weird. If that happens again, let me know. I don't know why that happened. KRUS. So KRUS, we have this one open. So this swing trade is open and still sitting here. So that one's open. And then Datadog, DDOG. So Datadog, I will leave this limit buy open, although it probably doesn't fill. So I think it's okay to leave this one open until the end of the week. I'll put Friday. So today's only Monday, so DDOG. Just in case we get some type of really big random spike down selling and something like this and we kind of bounce. I'll leave that limit buy open on DDOG 3322 by 2992. But if it doesn't fill, like I mentioned, between now and Friday, then probably cancel it. So DDOG, if you did catch that move though on a day trade, congrats. Here's the 5-minute chart. It was a really nice pop today. Just kind of slowly meandered its way higher. And here's the other two. So Smile Direct, like I mentioned on Friday, this is either a double bottom or a wave 4. So I mentioned I was going to leave it open 2 to 3 days. It filled today. So this is either a boom, 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 or it's not. Or this is a double bottom. And I don't know which one it is. Who knows? But 7 million shares came in today. We'll find out if we bounce. We do have a shaved bottom, almost perfect shaved bottom on Smile Direct. So if we get some buying, maybe that one will turn out to be all right. But again, if not, then we'll just bail out of that one and we'll get stopped out of Smile Direct. And then last but not least is LK. And LK had a very small candle today, although we did get triggered at 1946. So LK 1946 by 1766, not quite a $2 stop loss, but pretty close to it. Very tiny candle, and that's pretty much it on LK. All right, gorgeous. So that's our review of our swing trades. We got a good 45 minutes left. Also part of the Mentorship Monday, I did a lot of other back trading this morning, so you guys will get all access to that. But here's what I figured I would do today is go do some more back trading, this time on a 30-minute chart. This time using, we can do a moving average cross. Again, just practicing. So we'll have two moving averages. We'll do it on a 30-minute time frame, and we will wait for them to cross. And then when they cross, we will analyze the chart. If they don't cross, we won't do anything. If they do cross, we will. The two that we will use is the 13 and the 54. Those are the two moving averages we'll use, 13 and 54. We're going to go do some back trading on a 30-minute time frame. Someone give me a ticker. And we'll just do some back trading. We'll learn something new. We'll see what we get. Tesla, this will be fun. All right. Danny says, why 13 and 54? Would you like to pick any other moving averages, Danny? Those are just random, arbitrary, totally made up numbers, but you can choose any moving average you would like. Brad says, I like the 13, it works good. And Danny says he was just wondering. All right, cool. So 30-minute, now someone give me a date on Tesla. How far do you guys want to go back? What do you got? So while you guys are telling me that, I will build the moving averages. Okay, so we're going to do a 13, and we will do a 54. 13, 54. I'll take this one off. Any date? You guys got a date for me? '26th of September. We're going to go farther back than that, unless you meant of next year, of last year. I think you meant of last year. So 2016, 09/26. So the farthest we can go back is May. All right, I guess that'll have to work. Okay, all good. So this is the farthest we can go back. Oh, that's on LK. How stupid. I'm sorry. My bad. Yeah, that's why we can only go back that far. All right, here we go. Cool. We were back in September 2016. All right. So here's what we got on Tesla. We're going to go really, really far back. And what we're going to do is just a simple moving average cross. Again, ladies and gentlemen, when you're back trading, one of the main goals of back trading is to learn the stock, to practice any strategy you want, and build some rules for your strategy. Any strategy you want. You can pick any moving average you want under the sun if you want to use moving averages, if you want to use Bollinger Bands, if you want to use Hishinaki candles, if you want to use the Ichimoku cloud, if you want to use relative strength index, oscillators, indicators, doesn't matter. Anything you want. Just pick some and go practice it. See if you like it. Maybe you hate it. Maybe it's terrible. Maybe you try it and all you do is lose money. Then you'll get a free education where it says, hey, don't do that. And you'll go, oh, okay, cool. I won't do that. That didn't work very well. or I don't understand it, or I don't really like it, and you won't. All right, cool. So we're going to use the 30-minute chart. We're going to use the 13 and 54 EMA. Type in a 1 if you guys understand that everything in the stock market works, just not all the time. So it doesn't matter what strategy it is, doesn't matter what time frame it is, everything works. In the previous day trading, you guys will see me use the 105 EMA. You'll get a copy of that recording later. And if you're watching this on the recording, awesome. All right, so what has happened is this moving average has already crossed bullish. That's what has occurred. So this moving average has already crossed bullish. So if the moving average has crossed bullish, do you guys have any idea what direction we should be looking at taking the trade? Answer is bullish. That's right. Nice. Hey, we got that part done. All right, so now obviously it comes down to what strategy. So what strategy do we want to do? I mean, you kind of get to decide if you're an option seller, if you're a swing trader, active, not active, passive, covered calls. You could practice anything that you want when you do back trading. What I think will be really fun is practicing buying 100 shares of Tesla and doing covered calls. That's what we'll practice. 100 shares of Tesla and doing a covered call. Pretty simple. Dave says, so the slow EMA on top is bullish. Slow EMA on top. I don't know exactly what you mean by that. So the slow moving average is the 54 and it can never be on top. The shorter term moving average is always going to cross the slower one. So if it crosses, right, if the 13 crosses the 54 bullish, then that is a long signal. And if it crosses below it bearish, it's a short signal. Does that make sense, Dave? So if we do this in the next, week or so, got it. Okay, cool. Perfect. No, it's a good question, man. It's a very good question. Again, if we were in person, you were sitting down right beside me, I'd know exactly what you would ask, right? You're after typing it, so it's a little bit more of a challenge. Now, the one thing that a lot of people struggle with is when you're doing covered calls, they go, I don't know the premium. I don't know how much I would have received. We'll just make up a random number. I think most of you would be able to kind of guess how much premium you would get on a particular stock. So I'll prove it to you. Let's do this. Let's just do some really basic analysis. And what we're going to do is we're going to say, I'm going to buy 100 shares of Tesla right here. 100 share limit buy. And I'll prove that you guys know exactly how much premium you would get on a covered call. So 100 shares limit buy. Why here? Well, again, we're bullish. I could buy off of the moving average if I want to. Nothing wrong with that. But I figure I would just buy off of here, here. And since this is a retest gap, white candle gapping up, I figure we might just do one of these guys right there. So 100 shares. This is a $20,000 investment on Tesla. And I'm just going to go press the next button until we get filled. All right, we're filled. Done. That was easy. Now, did I know that we were going to do that? Yeah, most likely. Most likely, I figured we were going to pull back because, again, it was a retest gap on the 30-minute chart, white candle gapping up. So I just bought 100 shares of Tesla. And what I'm going to do is wait for a buying candle to come in if I wanted to sell a covered call. Or I could just turn right around. Since this is October 6th, the next week that expires is October 14th. So, ladies and gentlemen, let's just practice. If I sold a 215 covered call right now, how much premium would I get for next week on Tesla? I bet everyone here knows roughly how much premium that would be. What do you guys think? Let's get a consensus in the chat pane. What do you guys think it would be? Without even looking, we're just kind of randomly guessing. What do you guys think? Pablo says he has no idea. Josh has a number. Steven has a number. Danny has a number. Danny's number is wrong. Dave says you're talking Zulu to me. All right, well, that's good. Let me go show you how you can find out. But I'll tell you how much it's going to be before I even look. What I'm asking is, ladies and gentlemen, how much would a call option at $250 cost expiring next Friday? And that would cost about $3.55. So let's go show you. I'll show you how you can do it. Thinkorswim has a program that you can pull up and we can pretty much nail it down to the day. So this is October 5th, 2016. We'll go into one second. Think back. It's under Analyze tab. We will type in Tesla and I will click on this date, 10/5/16. Tesla 10/5/16. Minimize. Give me 1 second to lower this. Okay. So October 14th, what'd I say? What option? 215? 215 call. Okay, I was a little bit off. So the implied volatility is a little bit lower than it was back then. Option at that point would be $1.70. So $1.70 of premium. So again, folks, this is my favorite strategy. If you guys do not understand this strategy, please, please, please practice it. This is my favorite strategy. It is the easiest strategy in the world. Buying shares, turning around, and selling a call option. Buying shares, turning around, and selling a call option. Buying shares, selling a call option. So I am selling to open the 215 call that expires in 14/2016. I'm gonna bring in $1.70 of premium. And what does that mean? If I have 100 shares, what's gonna happen to my account? 100 shares, I'm gonna receive $170 free. 170 bucks. That's how much I'm gonna get. For selling the call option, I'm gonna get $170. My goal on this trade is to eventually sell Tesla at 215. Dave says, but it cost you 10 grand. It cost me 20 grand, actually, Dave. Unless my math is wrong, and it might be. We bought it at $20.08. Is that correct? Let me do the math. 100 shares. 100 shares times 208.28 equals 20,080.28. Okay. So that would be our share investment. Okay. So does everyone follow me so far? So I'm buying the stock. I'm turning around. I'm selling one call option, the 215 strike that expires the next week, and I'm gonna get 170 bucks. What will happen if Tesla trades up to here and closes above here on the 14th of October? What happens? Josh says you cap your gains. That is correct. What else happens? Danny says I wrote it above. Yeah. Josh says you will get called away. That is correct. You will sell your shares at $215. That's pretty much it. That's what's going to happen. You're going to sell your shares at $215. So for me, when I do this particular strategy, when I'm buying stock and doing covered calls, I do buy stock pretty low, right? So I'm usually looking at the hourly chart, the daily chart, kind of finding out where we are in the general scheme of things, seeing if we're on a low level, finding if it's a stock that I like, buying the company, and more or less holding that company until I get called away for a profit. You can do a lot of hedging with options, right? You can buy puts to protect your downside. You can sell calls to pay for the purchase of puts if you really want to. Very frequently I do that where I will hedge with options. I'll buy puts. Obviously you need money to do this particular trade, right? But you need money to do anything. So now from here, I'm just going to press play. Because if I was doing this trade, I would expect Tesla to do this, and the stock, the stock closed below 215. I keep my $1.70, and I'm expecting to do it again next week. So here it goes. Let's find out what happens. Oh, this must have been earnings. Maybe not. I don't know. Maybe not. If it was earnings, I probably would have done one more day, but let's just say it's over earnings. That's fine. So at this point, obviously you can see Tesla is straight up pooping its pants. It's selling off hard. Now, most traders at this point, what do? They go full freak out mode. They go, oh man, I'm losing. I'm a giant moron. I don't know anything about trading. I'm just going to get out right here and lose on the trade. It's like, that's fine. You can do that. But if you, again, like the company, believe in it long term, you're going to invest. You're going to be, you're owning the home, right? This is like owning a house and renting it out is what you're doing. So if you buy a house and the housing market immediately plummets and you have a renter in your house, do you just sell the house? Is the question. All right. Dave says no stop loss in options. Of course. Of course you can stop, you can get out of the option whenever you want. All you did, Dave, is you sold a call. So how would you get out of this call option, Dave? Any guess? Buy to close. Yeah, you buy it back. Because remember, you're just in shares. Now, in just a few moments, I'm gonna teach you guys a strategy that I think you'll really like in just a moment, and it'll blow your minds. Okay, so be prepared for that. If I don't blow your minds in 10 minutes, remind me, hey Jeremy, you got to blow my mind, and I'll tell you the strategy because you guys are gonna love it. I'm getting there, I promise. Now, if you want to buy it back, you can, and you can sell another one if you want, or you can just let it expire worthless. I'm just going to let it expire worthless. I'm not going to worry about it. Okay, I'm going to go forward until the option expires worthless. Going forward. October. I'm going to draw a vertical line for when this thing expires worthless. So remember, the way I'm viewing this right now is I'm viewing this trade as I'm owning a home. I have a renter in the house. They're paying my rent. That's how I'm viewing this, right? The housing market has taken a little bit of a nosedive. Look at Mr. Squiggles, though. He's not totally wrong. It dipped a little bit farther than he expected, but check it out. He thought it would dip. He thought it would trade higher. He thought it would dip lower, bounce, and then slowly consolidate. That's kind of what it's doing. The Squig Master isn't totally incorrect. All right, so I'm pressing play. I'm going a little bit forward, and all right. So this option has expired worthless. So remember, I have a renter in my house. I got $1.70 premium. They've paid me $170 on a $20,000 house. So if you do the math on this, again, I mean, literally think about it this way. This is a home. If I'm buying a $20,000 home, which would be, I mean, an amazing real estate price, you might have some rough tenants, If you're only charging $170 of rent, but that's okay. So we got $170 that we can do anything we want to with. This is cash that's in our account. We can literally do whatever we want. Dave says, what did that cost you? Again, Dave, cost $20,000 when we purchased the stock. Right? So just like buying a house, you have to spend money. So it cost 20 grand. We bought a $20,000 house. When we were holding on to that house, we have a $1.70 premium. So what I do when I back trades, I come in and I'll just write down $1.70 a premium. All right. So I got $1.70. Dave says you still got the stock. We still got the stock. Yes, sir. Kevin says net, you are negative cash flow over that time. That is correct. So I still have the stock, right? I purchased the house. I own a $20,000 house and I'm renting it out. You guys get this? I do this all the time when I'm trading, by the way. This is like this is my favorite strategy. Always will be, forever. All right, that call is gone. So now, if I want to do another covered call, I could come back to where we are now. Dave says, how often can you do this? Every week. You can do it every single week. So now it's October 17th on Tesla. And if I sell another 215 covered call, let's just go look at the premium. Okay, October 17th. And if I go out the very next week, 215 is going to bring in again about $1.40, give or take. Okay, 215, I could do the exact same call again, or I can sell a longer term call option. I'm gonna do the same exact one. Same exact one. So that doesn't require much brain power. Like, what option am I selling? Same one. Why? Because it worked the first time, so I'm doing it the second time. Does that make sense? So October 28th, 10/28/2019, I'm gonna bring in $1.35. Okay, $1.35 a premium. October 28th. So remember, folks, I still own the home. I own the home. I own the shares. And you ready for the next one? All right, here we go. JL says, how do you determine the strike to sell? Just pick one above where you bought the stock at, my friend. That's it. It's really easy. If you get called away higher than where you bought the stock, you will be profitable. Danny says, are you looking for more volatile stocks? No, not necessarily. I'm looking for stocks and for companies that I know exactly how they make money. I like their products. It can be volatile, that's fine, but Apple, I do this all the time on Apple, AMD, I do it a lot on Tesla. Steven says, would you consider selling the 210 call? No, sir. I would still do 215 because it worked last time. And Dave, I don't get $1.70. I've already mentioned how much I'm getting for this covered call. This is $1.35 this time. So I'm gonna do 215 because I want equity gain. That's what I'm looking for. I want equity gain. I almost never decrease the price of the covered call that I sold to match the stock price if the stock price is decreasing. If the stock price is decreasing, I either hold and don't do anything on the stock, or I just wait patiently. Because this strategy, you guys are going to like it a lot when the stock actually bounces and you get called away. Josh says you can keep getting paid and rent out your house until you make a profit. Bingo. So I'm just going to keep renting out my house until I go and find someone else to buy my house from me. So I'm gonna do 215 again. I'm gonna charge the tenants the same 215 call. I'm gonna get a little bit less premium, and we're gonna do it again. All right. So the green line is when this option expires worthless. Okay, there's the green line, ladies and gentlemen. So what happened? Robin says the calls that you sold go to zero. That is correct. Yes, ma'am. So these options, right? I sold this option for $1.35. What is it worth now at expiration? Zero. So I got paid my rent money. Another $1.35. Okay, it's another $1.35 a premium. Do I still have the stock, ladies and gentlemen? Yes, I do. I still have the stock, and I've gotten 2 covered call premiums. Again, is Tesla a company that I like? I think you guys all know the answer to that. Do I know how they make money? They don't really make money, but do I know how they sell their products? All that stuff. Yes, yes, yes. Right. It's a nice volatile stock. I've definitely done this on Tesla many times. I've sold puts on Tesla. I love selling volatility on Tesla. So I've definitely, without question, done this exact strategy numerous times. So here's where the mind-blowing part comes in. On some positions, people, when you do covered calls, there are 2 main downsides. Downside number 1 is this happens. Okay, that's downside number 1. The stock just goes berserk. Because if the stock goes bananas, then I've capped my upside. Concern number 2 is not all stocks go up. Right? Long term, you could get Tesla where you just get stuck in it and it just goes down, down, down for a long time. Or maybe you're in GE or whatever, or Google or Amazon, the stock just tanks and just really recovers. What I can say is you always make your money when you buy, ladies and gentlemen. Remember that. You always make the money when you buy. That's in everything. So if you buy very high, okay, it makes it a lot harder to make good money. So you want to buy as low as possible. So the one downside on covered calls, I don't think it's a downside at all, personally. It's literally not a downside at all. It's literally not a great upside. That's the thing. Here is a true fact. There is 0 additional risk in selling a covered call. That is a stock market fact. You can do covered calls in any type of account. Any IRA, any trading account with any option approval level at all, you could know 0 about options and do covered calls. The risk is in owning the stock because the stock can go down. Doing a covered call just adds 0 additional risk. All right. Now, if the stock goes really, really, really high, again, that's not a downside to me. That is a limited upside. Okay, it's a limited upside. It's not a downside because it's not going down. One thing that is a little bit of a concern for a lot of traders is, let's say that you do want to exit the stock. Sometimes you can't, because if you just sold the stock, what would occur? If you wanted to get out of the stock because you're freaking out and you're terrified and you want to sell your house because of whatever's happening, you want to get out of your house, you have a naked call. And in most accounts, you probably can't do that. Great job. A lot of you got that correct. Not a naked call. Nobody wants to get called naked. Okay, it's just a weird thing. If that is the case, here's where I mentioned I was going to blow your mind. One thing you can do is have a bear call spread on top of the share ownership. All that requires is you buying an additional call. So let me show you, all right? Type in 1 if you're ready to get your mind blown. I'm gonna show you something cool. By the way, no one talks about this strategy. Nobody. I've never heard this strategy in my life in any webinar I've ever been to, ever. All right, so on October 28th, the options expired worthless, so now this is October 31st. October 31st. So I'm going to come in and look at a November, and I'm going to do a 215 call again, and we're going to get $1.40 this time. So this is going to cost $1.40. And then I'm going to come in here and buy a 220 call for 85 cents. Bum, bum, bum. Buy to open. November 220 call for 90 cents. All right, any math geniuses out there? What's happened? My math geniuses, give me some insight. No insight? Okay. Here's the insight. 50-cent profit. Okay, you have a 50-cent profit. You no longer have a capped upside. And if you need to exit the position, you can, because now your call is no longer naked. Mic drop. Boom. So now you can do this in an IRA. And if you want to get out of your position, right, if you want to place a sell order for your shares, which I'm not saying you should necessarily. There could be times where you go like, you know what, I need to get out of my stock because this thing is just tanking and it's not going to come back anytime soon. If you don't want to play with puts, I always use puts, but if you don't want to use puts, you want to use a hard stop, go for it. But this allows you to now place, it allows you to place a stop loss on your shares because your sold call is no longer naked. So you have now simply a bear call spread and share ownership. I don't even know what this strategy is called. I'm not even sure. You likely will have to have a higher level of option approval to do this strategy. Okay, so throwing that out there. But the more you practice it and the more you get insight with it, you can always call your broker and explain it to them. And if you can explain it to them, then they'll most likely give you approval to do this strategy. And sometimes you might have to tell a white lie. You might have to say, yeah, I have 3 years of options experience, even if you have none. You just have to tell a little bit of a white lie sometimes, and they'll kind of let you through the gates. Honestly, I've done that before. When I first created my accounts, I didn't really know anything about option trading. I just told them I did, and whatever. So that's up to you. That's up to you and your moral code. I don't necessarily have an issue with it because I back traded options, even though I didn't trade them when I get certain approval levels at the time. I knew how they worked, and I just said that I had a lot of experience, even though I didn't. Okay. Albert says attending RLT counts. It does. Yeah, absolutely. It definitely counts. So this is the cool thing. If you don't want to cap your upside, right? If the stock does this, if the stock does that, your upside is not capped. Number 2, if the stock doesn't do that and it does this, 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 you still get the same benefits of the covered call, and now you only make a 50-cent premium. So what you're doing is you have no longer a capped upside if the stock really, really runs. And again, it gives you an opportunity to exit your position in an IRA or in another account without necessarily being afraid of having a naked call. You still have obligations, right? If the stock does, let's say, stop you out and then trade back up and close in this spread, if you don't have your shares, that's still not a great thing. Okay? Still not a great thing, but it does remove some of the challenges. For me personally, I don't do this strategy. I know it works. A lot of people seem to get really stressed out when they miss upside profits in a stock. I'm not one of those people. I love just buying the stock, doing a covered call, getting called away for $7, $8, $9 a share of profit, and then doing it again. I'm a big fan of that. If you don't like that, then that's cool, but I like it, so it doesn't really bother me. So I don't mind getting called away. I'm going to do a November 18 covered call for $1.40, and I'll drag it over here. And remember, we still have 2 covered calls before that have expired worthless, and I'm about to do another one, so here it goes. All right, so I did another 215 call. Remember, I still own my house. I'm still renting my house. Tesla is net down, right? I'm down from where I bought it. And that covered call is expired worthless. So ladies and gentlemen, do I still own my house? Yes or no? In this situation, this is a $20,000 house, which is shares. Shares of Tesla. All right, I still own my house. Did I get rent money? I did, $1.40. Can I do it again? All right, you guys getting the hang of this? Cool. Dave says, so are you shares less that much they have fallen to? No idea what that question means, brother. Might have to ask that one again. Steve says, what is a good stock that has volatility and still pays a dividend? Apple. Apple, SPY, Johnson & Johnson, Boeing. Trying to think of some other really good ones. Honestly, Microsoft is not bad at all. Intel, not bad at all. Intel has good volatility. NVIDIA. There you go, man. Choose any of those. BP. BP cover call premium is okay. Cover call premium is okay. It's not bad. I have not personally done McDonald's, and I haven't done Coke. Dave says, you bought 100 at 215. No, Dave, I bought 100 shares at 208.28. Remember? Dave says, now they're at 185, so you no longer have $20,000. I know they no longer are worth $20,000, Dave. That is absolutely correct. If I sell the shares right now, I would sell the shares for $185 a share, which would be $18,000, $18,500. So my house right now is worth $18,500. But I have not sold the shares yet. I still have the shares, right, Dave? Are you following me? I own my house. I still have my house. My house is down lower than I bought it for. You are 100% accurate, but not for long. Okay, so Tesla, November has come and gone. We're now on November 21st. So November 21st. All right, we're going to go look at a December covered call, and I'm going to do, so notice There's absolutely no money in 215. You guys see that? Robin says, so what happens when the stock goes up to 215? Then you sell your shares at 215. JL says, this is a good way to capture premium while your stock is in a distribution phase. Absolutely. Robin says, not the shares, the options. You don't have to do anything to the option, Robin, at all, ever. When you have the covered call, you don't have to do anything to it at all. You just sit back and let it do its thing. So you don't have to do anything to the option, ever. All right, December 16th. I'm not going to sell a covered call yet because there's just no premium. So I'm going to go out a little bit farther. I'm not going to sell a December. I'm going to look and see if January has any money. January 215 has $1.70, but I think I'm going to do, since I'm going out till January, and this is a 2-month covered call, I'm going to do the 220, and that's going to give me $1.20 in premium. So since I'm selling a 2-month covered call, I'm going to go a little bit farther above. I'm going to go a little bit higher. Does that make sense, guys? It should. Josh says, are you getting the bid between the bid and the ask? Yes, sir. Yep, just going bid and the ask. You can almost always get the mid price. So $1.20. And that expiration is January 17. So 120, 120.17, and that's $1.20. And did I write down that premium that I just got? I think I did. I can't remember now. Go back and watch the recording. All right, so here's $1.20, and here we go. I'm just going to press play, and sorry, let me take the green line to January expiration. January 20. All right, here we go. So cool. Now Tesla can go all the way up to 220, right? Remember, I bought the shares at 208.28. 208.28. This will be covered call number 4. And this you're just waiting at this point. You're doing whatever you want. It doesn't really matter. You're in the gym, you're working out. I mean, this is weeks are going by. We're in a time machine right now. So remember, you're owning a home. You have home ownership. You're renting out your house. People are living in your house. And you're doing absolutely jack diddly. Okay, this is very important to talk about. Let's discuss this for just a moment. Is Tesla at 220, ladies and gentlemen? Yes or no? Yes, it is. Is it the option expiration yet? No, it's not. Will I get called away yet? The answer is no. Tesla doesn't pay dividends, so the chances of it are 0.00001%. If Tesla paid a dividend, the chances of it increases. The farther I go in the money, the more likely it happens. So if Tesla goes up to like 240 or something, then I could get called away early. But if I get called away, ladies and gentlemen, where am I going to get called away at? 220. That is correct. Yep. All right. So again, I'm just going to press play. Robin says, what does called away mean again? It means selling your shares at that particular price. Getting called away, having your shares being sold at 220. Does that make sense, Robin? Robin says no. All right. So Robin, if you buy your shares at a particular price and you get called away at 220, that means you sell your shares to someone else at 220. Your shares get sold at 220. Robin says, but you don't have to buy to close. No, ma'am, you do not. You don't have to do anything. Dave says, it's not your choice. It's always your choice. It was your choice when you sold the option. You get to decide when you sell the option and how much you sell it for. Robin says, there has to be some consequence. There's not a consequence. The consequence is you sell your shares at 220. That is the consequence. You have the shares. If you did not mind getting called away and selling your shares at 220, Robin says it can't be that easy. It is that easy, Robin. I've been doing this for 11 years. Josh says the seller of the option has the obligation and the buyer always has the option. Correct? That is correct. All right, we're going to go to option expiration. Okay, option expiration is here. So this is a very good example, ladies and gentlemen. Notice that Tesla's at 244. And we sold our shares at 220. Right? Do you guys see the difference? This is called limited upside. Robin says sell to open, right? That is correct. When we originally sold the trade, when we sold the call, we sold to open. So this is limited upside. So we have to sell our shares at 220. The broker will do this automatically. We don't have to do anything. So we now get called away on our stock at 220, plus we still get the $1.20 of premium. We still get the $1.20 of rent money. So we have 170 plus 135 plus 140 plus 120, and then we have 220 minus 208.28. And this will be our net gain on the trade. Okay, so 220 minus 208.28 equals 1172. 1172 plus $1.70 plus $1.35 plus $1.40 plus $1.20. And that would be our net profit on this trade. And then we multiply times 100. Plus 170 plus 135 plus 140 plus 120 is $17.37 per share. Right, we bought 100 shares. That would be $1,737. So we rented a house. We bought a house for 20 grand. So we bought a house for 20 grand. We sold the house after we had some renters in the house for $1,737. That's almost a 10% return, right, folks? Almost a 10% return on, cash on cash or cash on risk or whatever you want to say it. And that took us 3.5, 4 months. Right, so we bought over here in October, and we sold in January, and almost got a 10% return on our total profit. JL says, "What's the other scenarios?" Just keeping the shares. The only other scenario is you don't get called away at 220. So, ladies and gentlemen, can we do this again? The answer is yeah. So now what I would do is I would just sell a put to get back into the stock. Either sell a put or just buy the shares again. So if I come back and I do, all right, I want to buy them at 208 again. I can set up to buy at 208, or I can sell a put. Dave says, what's a put? You have a call and you have puts. Josh says, can you explain selling a put to get back in really fast? Let me send you guys a video. I bet there's one for free. I bet I have a video for you guys. Selling puts, real life trading. Okay, here's one video. Here's one video. You should probably watch this one as well. In fact, I'll just send you guys this search result. Go watch all of those. There you go. So again, you could either sell a put, which I would do, or you could just do a limit buy to get back in puts. Let's say January 20th. So I would go January 20th, and I would look at, let's see, a February 205 put would bring me in 70 cents. Okay, so I would sell a put down here, and I would get 70 free cents. And if I get put shares, those shares would be at 205. This is a 100 share increment. 205, 70 cents is how much I would make on that trade, 0.70. And one of three things happens. Stock goes higher and I don't get put to shares. Stock goes sideways, I don't get put to shares. Stock goes down all the way to 205 and I get put to shares. Either way, I make $70. And I only do that if Tesla is below 205 by the 3rd February, which is February 17th. February 17th is right here, which there's no chance that's going to happen. All right, so here we go. Josh says the risk is the stock could be at 195 and you pay 205 for them. That is accurate. Yes, sir. So 205 put sale. Sold the put. Tesla's going sideways, going sideways, going sideways, going sideways. And this is when Tesla starts a little bit of a run. Okay. The put has expired worthless, and I got 70 free cents. Now I can do it again. February, and I've actually been selling puts on Tesla for about 4 years. I've never gotten put to stock, unfortunately. So this is a pretty painful example. This is actually a pretty close to real life example on Tesla of just getting called away and then selling puts and never getting put to shares again. Dave says, have you still got the shares? Nope, I now just have put sales. I'm trying to get put some shares. I have a December 140 put sale right now on Tesla. Okay, let's do 210 put sale for March. And this will be the last one that I do. I'm glad you guys have a lot of questions. The good news is these are strategies that I talk about all the time. I have tons of free videos on them. Tons and tons and tons and tons. Put sale, we're going to do April. So let's figure out how much premium we could get for an April put sale. April would be 210. Why isn't it going back that far? Oh, I chose the wrong one. 210, I would get, wow, $2.10. That's really good. Robin says, put the shares means that you sell to open at a low price, then the stock drops to that price, but then you have to buy to close them. Nope, again, Robin, you don't have to do anything. Once again, you don't have to do anything at all. If you want the shares, you don't have to do anything. You never have to buy to close these. You can, right? You have the ability to buy to close at any point you wish. Whenever, wherever, anytime. So if you do anything on an option or a stock, you can get out whenever the hell you want. You buy it, you can sell it, you buy it. You can get out anytime, 24/7, 365. If the market's open, you can get out of that trade. But if you actually want to own the shares at 210, You don't have to do anything. Just sit down there and let it hang out. Make sense? Anyone have any questions on it? Dave says patience. That's right. At this point, you literally don't have to do anything. Josh says you just have to have $21,000 in your account. That is correct. But we already have $21,000 in our account, right, Josh? Because we did 100 shares of Tesla before. And we bought them at 208. So we know we have the money because we've done this trade before. Right? So now we just wait and let Tesla do whatever it's going to do. So if it comes down to 210 in April, then we get put to shares at 210. That's kind of what we want. That's really what we would like. And if it doesn't, then we would make $2.10 of premium, and then we could do it again. So look at Tesla just hanging out, doing absolutely jack squat, trading sideways. And again, the more money you have, the more things you can do, obviously. Steven says, you can sell December $20 2019 Tesla put for $10. What strike price would you do the sell? You can sell Tesla December put for $10. You can sell Tesla 210 put right now for $10. Yeah, that makes sense. Tesla's at like 240. So earnings are in November. So if you want to sell a put on Tesla over earnings, which I wouldn't specifically suggest doing unless it's very far away, unless you really want to own shares of Tesla, then by all means, knock yourself out. I forgot to drag this over. So this is April 18th, 19th, 20th, 21st, 21st. So this green line represents the expiration. Okay. So you'll notice again, Tesla is having a nice run up, and obviously we're not going to get put to shares at 210. Would you guys agree? All right, so the stock closes at 305. So there's zero chance that we're going to get put the stock. The put expired worthless, and we're done. We're done. So we can keep selling puts down here, but we're just going to have to go farther and farther and farther away to get premium. Because remember, you make the money when where you buy. So let's say you did a put sale at 240. And let's say the last one, this is the last one that I'll do. 240, and let's say you did one for June. Okay, June 240 on April 21st would pay how much? Let's find out. April 21st, a June 40 would pay, 240 would pay, not bad, another $2. So we get $2 again. I got to keep track of the put sale premium. Put sale premium, so you have 70 cents, and then we did $2.10. Okay, $2, and this is June. All right, and so again, we would just press play and see if we get put to shares. I don't think we will. Most likely we won't. And there goes Tesla. Running, trade down. So it was earnings. Earnings just happened. At that point, earnings was like $100 away. So I really wouldn't have worried about it. Tesla always pays pretty good premium for put sales, most usually. It's a very volatile stock. Does not pay dividends at all. But there are some volatile stocks out there that do pay dividends and also, again, pay good covered call and put sell premium. We talked about both of those. So Tesla right now is at 347. And again, you guys all know that there's no way we're going to get put at 240. So this put sale is going to expire worthless. And obviously you can see that Tesla did not trade, like if we had just kept the original shares, obviously would have made a lot more money. I think we can all agree on that. If we had kept the original 100 shares from beginning, like never did anything at all, ever, it would have just totally crushed. We could have also still have done these put sales, still have done the covered calls, and then swing traded Tesla with a different strategy, right? Using the crossovers, using a moving average, using a long term. We could still use Tesla, right? We could still actively trade it, but I realized pretty quickly that you guys all weren't super familiar with the covered call put sale process. So I want to make sure you guys became very familiar with that. Type in a 1 if you learned something a little bit new today, because that's my goal. If you learned something new, that's fantastic. That's the point of Mentorship Monday. And again, I really do love that strategy. For me, I will be totally okay to get called away on stock and lock in a profit, and I'll just go find something else at another price to go buy at a lower price. At some point, ladies and gentlemen, every stock pulls back a little bit. All right, so I think we all know what happens on Tesla at this point. I can't really trade it from here because I just know it too well. But it runs up to 400 and then tanks and then comes all the way back down to where we were now. Right, so Tesla present day, this is present day Tesla. I think this is a good time for that strategy again. Same one we just talked about, same one we just looked at. It's been trading sideways. It's been consolidating for a long time. It's at a low level. This is the same exact price or very close to the one that we were just back trading back in 2016. And I have like I said, I did a put sale on Tesla at 140 for December. And I'm getting paid $1.35 for that put sale. And again, most likely that put sale will indeed expire worthless. And if I zoom into an hourly chart or 30-minute chart on Tesla, this is the hourly chart. Moving averages are about to cross bullish. And I think you could probably buy 100 shares of Tesla at 235 and then sell the 245 covered call expiring in 2 weeks. And eventually, I think the exact same thing that we just did, almost verbatim, on Tesla is going to happen again. Any questions, ladies and gentlemen? Josh says, great Mentorship Monday, Jeremy. Thank you. Dude, my pleasure. Dave says it's late. All right, man. Take care. I do have the Money Grows on Trees presentation in about an hour and 10 minutes if you guys want to come to that, where I kind of get to discuss a little bit about the plans and what we're going to do. So I'd love everyone to be there. I'll send a reminder link in Slack, but I will send out the recordings. You can watch them as many times as you want, ask as many questions as you can. Danny says, when is the event? Come to the webinar and I'll tell you all the details. The webinar, it starts in about 69 minutes. Otherwise, check out that recording. I will record it. Lita says, we post a link for the webinar. I will. I'll just do it really quick. Anyway, Danny, the webinar, the event is in May of next year. May 2020. May of 2020. There you go. Burrotato shake. All right, team from around the world, thanks for being here. You guys rock. And then, by the way, if you liked this back trading, you're going to like the one that occurred in the morning room even more. That one was really good. Some good stuff coming your way, folks. Thanks for being a part of Real Life Trading. Thank you for helping me enrich lives. And until next time, love life, live life, and trade it. Bye.